shift focus to another brokerage note then coming in. Morgan Stanley has added Bajaj Finance in their focus list in place of Reliance Industries as it fits their quality large cap theme and in fact has a tested model also. In fact, we do have Sharad who's standing by with more details on the key takeaways. Sharad, over to you.
Well, Morgan Stanley has a focus list, and interestingly, they have added Bajaj Finance, and there has been a removal of Reliance from this list. Now, they have stated that Bajaj Finance fits the quality large thematic space and has also a tested model and a good vintage business model which has been there. Now, also it appears to be a good play when it comes to the consumption revival in the unsecured loan space. Interestingly, they are expecting a credit cost to come down to almost 200 basis points in FY26, and the impact would be that EPS growth outlook would be going up by more than 25% for FY26. Also, an interesting development for the stock is that the company would be a beneficiary of a higher middle class spends when it comes to the overall tax cuts which were announced in the recent budget as well, and also the impending interest rate cuts which would be coming in. And of course, recently also there was a rate cut after almost 5 years by the RBI. Now, the valuation, looking at it, that offers upside from current levels versus the history and the fundamentals. That's what Morgan Stanley is bullish on. And overall, on a recommendation basis, they have stated that large private sector, financials, consumer and industrial stocks and IT services would be something a focus area for.
Okay, so recommended the large private sector space. Thanks very much for those highlights from that note, Sharad. Moving on, we have Ria standing by to tell us the list of stock that could be buzzing in trade today on the back of earnings and the news flow. Ria, morning.
Yes, good morning. Let's take a look at the stocks that are going to be in focus today. A lot of companies have reported their quarter 3 numbers. First up is Grasim. Now the revenue has gone up around 27% on a year-on-year basis. But this time around they've reported a net loss of rupees 168.65 crores versus a profit of rupees 236 crores. So a big cut coming in there. EBITDA is also down around 48% on a year-on-year basis, and the margins have also fallen very steeply, down 483 basis points, coming in at just 3.3% in this quarter versus 8.2% in quarter 3 of last year. There's also Nalco reporting its quarter 3 numbers. The revenue has gone up around 16.5% sequentially. Even the EBITDA has gone up more than 15% over the previous quarter, and net profit has also gone up around 50%. So good numbers coming in for Nalco. There's also MTAR Tech. Now the revenue has gone up around 48% over the previous year, and the EBITDA has seen a jump of around 40% over the previous year. Even the margins have actually slightly underperformed, coming in at 19.1%, just about, versus 20.2% in the previous year, and the net profit has jumped up around 53% on a year-on-year basis. So overall good numbers coming in for MTAR Tech as well. Signature Global has come out with its key operational updates for quarter 3 of FY25. The company has achieved its best ever 9-month pre-sales at 86.7 billion rupees, and the net debt has also been reduced to 7.4 billion rupees at the end of 9 months FY25 versus 11.6 billion in FY24. Shifting away from earnings though, Lupin will also be in focus since they have received an approval from the US FDA for a nasal spray. Shriram Properties will also be in focus since they have signed a JDA for a prime land parcel in Chennai for 3.2 lakh square feet saleable area with 350 to 400 crores of revenue potential. Lastly, also keep your eye out on Aditya Birla Capital since they have made an investment of rupees 100 crores on a rights basis in the equity shares of Aditya Birla Capital Digital Limited. So keep your eye out on all of these stocks today.
Well, absolutely, Ria. Thanks for getting us that update. But with that, it's time for